One of the most common questions we get is what is the difference between term insurance and whole life insurance? So that's what we're going to talk to you about today. What are the biggest differences between the two types of insurance and what might be the best for you? We're Shannon and Michael, and we're with Healthcare Genius. So to start, let's talk about term insurance. What is term insurance? What do people use it for? I always like to say that it's similar to how you think of homeowners insurance, but Michael, do you want to give us kind of a quick overview of what it is and who uses it?
Yeah, Shannon, and good to see you today. I know these are trying times what we're going through, so hopefully there is light at the end of the tunnel. Term insurance is essentially when you're buying that, you're looking at something that's going to give you the maximum amount of death benefit coverage for the least amount of premium in most cases. So, and when we use the word term, that's really normally just defining what the guarantee is. So you might have a 5-year term or a 10-year term. And so during that period, your premiums won't change. But if you had a 10-year policy and you got to the end of year 10, then your premiums are going to go up, and traditionally pretty significantly from what you were paying previously.
That's right. So when you buy the policy, that particular policy is actually only there in that term. So when the term's over, you're actually buying a new policy, or if you're renewing, again, it's going to be more expensive. So if it's a 10-year policy, those premiums that you're paying are only going to stay the same for those 10 years or 20 years or 30 years, whatever that term is. So that's really the big downside, is your premiums are guaranteed to go up at the end of the term if you want to continue to have life insurance.
That's exactly right, Shannon. And we see these, a lot of times people will use these for maybe they have a short-term loan out and they want to protect if something happened to them. We see that with businesses and individuals. But we also see people purchasing it for their mortgages to make sure, again, maybe they have a 15-year mortgage. They want to make sure if something happened to one of the owners that they could pay off the mortgage. So those are a couple of examples of where people will use term insurance.
And the reason that I said earlier why I like to compare it to homeowners insurance is it's kind of a use it or lose it type of a thing. So if you have a 20-year term policy, if you live through those 20 years and the term is up, you don't get anything. So the only way that you receive a death benefit is if you die within that term.
That's right. And just to give people some perspective on what the cost differences are, we just had a client who bought a policy in 2000 and it's now 2020. His premium was about $80 a month when he first purchased that, and it was guaranteed for 20 years. The premium on the policy after it had run out of that term, $350 a month. So you can see that's significant.
Quite a big jump. But the upside, you might be thinking to yourself, well, why in the world would I ever buy a term policy? The upside is that if you know that you only need it for a certain amount of time, it is way, way cheaper than any other type of insurance policy. So, if you're on a budget or if you know that you only need it for a certain amount of time, that's really the upside. So now that we've had a little overview on term insurance, Michael, do you want to talk us through what whole life is?
Really one of the first policies that life insurers introduced over 100 years ago, 150 years ago, and it's designed to be permanent. So unlike term, where we're just going to have it for a certain period of time, the whole life insurance is going to be there. As long as you pay the premiums, it'll be around forever, or as long as you're alive. So a lot of people purchase whole life insurance for their children when they're young, so that they'll have a policy as they get into their adult years. We also see a lot of people buying whole life insurance to use it as a savings vehicle. It can work really well for that. The difference between, again, the whole life and the term is that with whole life, you're paying more upfront than you would for term insurance for a death benefit. And part of that is because you're actually, some of the money that you're paying in premium is going into this, what's called a cash value of the policy. That's the big difference. You're going to pay more in the early years, but with the idea that as you get older and your cost of insurance goes up when you get older, then you're going to have money left over to pay those premiums for the rest of your life. And you can guarantee these policies for life. You can guarantee them for to age 90. You know, there's a lot of flexibility in whole life as far as what your guarantees might be, as well as the premiums that you pay.
Sure, we talk a lot about flexibility with whole life and lack of flexibility with term. So you kind of touched on this, but for term, you buy it for the death benefit. Whole life, you do have a death benefit, but if you need access to that policy while you're still alive, how does that really work?
Yeah, Shannon, a lot of times people will either take withdrawals of the cash value out of the policy. They can also take loans against the policy, and that's where they're going to get some of the money in the policy. It's really not the money. The insurance company is going to loan them money against the policy, is using it as collateral. And then a third way is dividends. So some people will choose to take dividends down the road that the insurance company is paying. And if you, a dividend is basically interest. So the insurance company is promising to pay you a rate of interest. And so that's a third way that people can take income or take money from their policy down the road.
So really the moral of the story here is term insurance and whole life really are totally different types of insurance policies. The benefit to term insurance is that it is a lot more affordable, but there are really a lot more benefits to whole life insurance if it's something that you can afford to buy. You know, you have that guarantee, it's always going to be there if you continue to pay for it, and there's a lot of flexibility in terms of what you can do with it throughout your life if you should need to. So thanks for watching. If you have any questions for us, feel free to comment below. And if you haven't already, make sure you subscribe to our channel and click the notification bell so you know when we come out with new videos.